Three, as we talked about earlier, the title of the issue, the Shockwave issue. Here we get into Shockwave now. Shockwave Medical, ticker SWAV, gets approached again.
Yeah, so this was a huge win for Deep Knowledge Investing and our subscribers. I recommended the stock to our subscribers in December, so about 3.5 months ago when it was at 190. And what had happened was about a year ago, the company was approached by Boston Scientific and they wanted to take the company over for 285 a share. That didn't happen. The stock cratered. And what we realize is that Shockwave makes a best-in-class device that enables placement of a stent where arteries are calcified. There's hardening of the arteries, and that can make placement of a normal stent difficult, impossible, or dangerous. And prior to Shockwave, the best standard of care was something called a rotablator, which is like almost like a drill or a blender on a thin wire. And so they'd run this wire through the artery, get to the part that's calcified, start the blender, start the drill, and drill through. And that procedure has two problems. One is it's very risky because if the surgeon misses by just a little bit and nicks the wall of the artery and perforates the artery or opens up an opening in that artery, the patient can die on the operating table. They can bleed out and die within minutes. It is a crucial, critical procedure. The other problem is, let's say that device is used properly. What will happen is the rotablator will remove the plaque in the middle of the artery, but it can't get the stuff that's at the edge of the artery, again, without nicking it. And because of that, you can have a stent harden around, the artery harden around a stent, and that can lead to long-term problems. It's not particularly safe. Shockwave, what it has is they've got a device that goes into the middle of that artery and uses electrical pulses to break up the plaque. It's actually based on old technology. It's what they've used for 30 years to break up kidney stones. But Shockwave is the only company in the world that has the equipment and the procedure to do it within a coronary artery. And what that does is it safely removes the plaque and also removes the plaque from the artery wall. And so there is no company in the world that has better equipment for these difficult procedures than Shockwave. And the company growth has been phenomenal. I think last quarter it was more than 40% revenue growth. There's room to grow in the international markets and room to grow into peripherals, which is just a fancy way of saying procedures that involve blockages in arteries that go to the arms and legs. So here's what happened. When we initiated on the company at 190, we said, hey, this company is going to be bought. There's no way in the world that they remain a separately managed enterprise in the future. And last week, Johnson & Johnson announced they were in takeover talks with Shockwave, and the stock closed on Friday, I think at 325, up more than 70% in under 4 months. That was a huge win for DKI subscribers.
So Gary, let's hypothetically say, you got Johnson & Johnson. I think in the past, Boston was in the mix as well. Sounds like they're obviously in talks. Let's just say hypothetically these talks these acquisitions are rejected, right? What does that mean to you? Does it adjust what you do with the position moving forward? What does that tell you?
Yeah, so the upside here is what we'd love to see is Boston Scientific or Medtronic come in and bid, and then you have a bidding war. And when that happens, the price can go up huge. But let's say, in this hypothetical case, Boston Scientific and Medtronic don't come in. And, let's say the stock is trading right around, where Johnson & Johnson is bidding, call it 325, 330, something like that. And management rejects it. So what we would have had in this hypothetical situation is management rejecting an offer from Boston Scientific at 285 last year, an offer from Johnson & Johnson this year at more than 300. Here's the thing. If you are a management team and you reject that offer, you better have a lot of confidence in your near-term results. Because if you reject a takeover offer from a larger competitor and then post really lousy results, you're going to lose your job. You're going to be sued. There will be shareholder lawsuits. You're going to spend the next year involved in litigation and, probably lose your job. And that's not why these guys are doing this. It's also worth pointing out that management has sold a lot of stock. Now, some people might say, wait, that's a concern. But management also owns a ton of stock. The CEO in this case owns, close to $100 million of stock in this company. So he's incentivized to do the right thing for shareholders. But a situation where company management sells stock into the market at a low level, but doesn't give public shareholders the takeout multiple, there's a 100% probability you get sued. So if they reject a deal here for the second time in 2 years, you have to figure they know everything I've just said, and they would have an enormous amount of confidence in their near-term results. And if I were one of the sell-side analysts following the company and they reject the offer, the first thing I would do is take up short-term estimates, right? I'd be raising revenue and earnings estimates for the quarter and for the year just on that, because again, otherwise management's going to be sued.
Right. Great. Moving to thing number 4, Gary, and Gary, congratulations too on that call initially. I mean, in what, you said December, 3 short months to, just an incredible run that we've seen there. So don't want to move forward before I do say that. So it's very exciting.
Let me add one other thing that's really important here. This was a team effort. Dr. Paul Thompson is one of the country's top exercise cardiologists. He's on the Deep Knowledge Investing Board of Advisors. He was the one who knew about this. He was the one who called me, presented the idea. And then when I was working on the research for it, got me in touch with Dr. Dan Fram, who's one of the top interventional cardiologists in the Northeast. So, I've got guys on the board who are bringing me these unbelievable ideas and helping me do the research. And Dr. Thompson and Dr. Fram did a webinar with DKI subscribers where they spent an hour actually going through the medical device and the medical procedure and talking and explaining to people, lay people, exactly how this stuff works and why the Shockwave solution is better. It was just a remarkable way to get an idea and explore an idea and understand it in a way that a lot of people wouldn't. And so, I want to thank these terrific cardiologists and the DKI Board of Advisors who have, helped us just put up unbelievable returns here.
Definitely. Yeah. And if you're interested in getting access to those webinars like we're talking about, and obviously Gary's deep dives into these new positions that are coming online, be sure to subscribe as a premium subscriber. You'll get all of those notifications and access to Board of Advisors, as well as doctors like Dan Fram and so